Hi, welcome back to Joe Blogs. And as you can see, I'm not in the Joe Blogs studio today. I'm actually in my kitchen because I'm getting some work done in my studio, but that doesn't stop me making videos. And in today's episode, I want to talk to you about what's happening in the Russian economy. If you've been following the channel, you'll know that I've posted quite a number of videos on Russia over the past few days because things are really starting to heat up. We're starting to see the cracks appearing in the Russian economy that I think we've all been expecting for a very long time. And the head of the Russian central bank, Elvira Nabulina, who I think is one of the voices of reason in Russia. If you remember back to the start of the invasion of Ukraine, she actually tendered her resignation as the head of the central bank, saying that she didn't want to do the job anymore. But President Putin encouraged her to stay on. So she's been in that role throughout the whole of the war in Ukraine. And in a recent meeting in Russia, she came out and provided a warning about turbulent times ahead for the Russian economy. So we've got a very senior figure who's close to President Putin, basically saying things are going to be getting worse. And I thought it was worth having a look at what she said, because I think she's highlighted a couple of really interesting points. She said, "We've adapted to some external challenges, but we are facing very turbulent times. I'm confident that this presents new opportunities for development and for increasing labour productivity in conditions of expensive labour. We base our efforts on this." Now, what she's referring to there is the fact that the movement to the wartime economy has really pushed up wages in Russia. We've seen a huge increase in labour costs as a result of the fact that the companies that are being sponsored by the Kremlin to produce things for the war in Ukraine are basically offering higher and higher wages to make sure that they can get in as many people as possible to fill all of their vacancies, to max out on the potential revenue from the Kremlin by delivering all of the uniforms and guns and bombs and various other things that are needed for the war effort. But the problem that that's caused for Russia is that it's pushed up wages across the board. So normal companies who've got nothing to do with what's going on in Ukraine are having to compete in that labour market, and therefore they're offering higher wages, which is impacting on their profitability. And this is one of the factors now that's feeding through into the potential slowdown and maybe even recession in the Russian economy. She went on to say that the high cost of labour spurred by the military spending that has led to the wage growth spiral in many sectors, as well as curbs on immigration, would remain for a long time. And I think those curbs on immigration are quite interesting because they're not being driven predominantly by the state. This isn't like what's happening in other countries where we're seeing, such as the USA, where there's a big crackdown on immigration and people who don't have the right to stay in the country are actually being deported. It's not down to that. It's predominantly because a lot of the migrant labour that was moving into Russia prior to the war in Ukraine has basically decided not to. Firstly, because there was a risk that they could get actually recruited and sent over to Ukraine. There were lots of reports I mentioned in previous videos about foreign nationals actually being conscripted and sent to the front line, which would be an absolute nightmare. If you went just to get a job to provide your family with some income, and then all of a sudden you're in a Russian uniform in the front line in Ukraine, that's not really what you're looking for by going to Russia. So there's been a big pullback from lots of people who may have gone to Russia to fill some of those vacant jobs that could have then brought down the wages, because if you've got an increase in supply, then obviously you can reduce the amount that you're paying because you've got more people to choose from. But Russia's really struggled because it's lost all of that immigrant workforce at the same time as the state has been taking up all of the slack in the labour market. So she's pointed out here that this isn't something that's going to be sorted in a short space of time. It's likely to go on for at least a year, possibly as long as the war in Ukraine is going on, which nobody really knows when that's going to end. She went on to say that the economy should in future rely entirely on domestic sources of financing, as cheap funding from abroad, abundant before the Ukraine conflict, is no longer available. So we've talked about this plenty of times on the channel, but basically overseas investors and lenders no longer want to have anything to do with Russia. So Russia is really struggling to be able to finance itself using the global markets. And prior to the invasion of Ukraine, it was raising lots of capital, both equity and debt, and also encouraging companies to move to Russia to set up joint ventures and new facilities. But all of that has stopped as a result of the invasion of Ukraine. So you can see how the financial implications of the decision to send the army into Ukraine have really started to hurt the Russian economy. She went on to say that, in my view, structural adaptation to external constraints has been completed. We have demonstrated our ability to adapt to these challenges, but now we are facing structural shifts of an entirely new kind, primarily technology ones. There may have been more far-reaching consequences than we expected over the past 2 years, she said, mentioning artificial intelligence applications in the economy as one such challenge. So I think AI has obviously been the industrial revolution of this decade. It's been the big turning point for a lot of different companies. And obviously at the forefront of AI is the USA. So ChatGPT, I think, was basically the first one that everybody became aware of and had availability. You could actually, most people use ChatGPT, whether it's just for booking holidays or thinking about what to do for the weekend, right through to writing reports, doing full-scale analysis. It's a really useful tool. So it's really helping to lots of businesses to move forward. We're seeing huge advances in lots of different sectors and lots of different regions. But clearly, Russia doesn't have access to ChatGPT, nor the whole breadth of development. So it's not just OpenAI and the company that's producing ChatGPT, but the whole world of research and development and the new scale of AI movements that's happening on a daily basis isn't being shared with Russia. Russia is still facing the sanctions. So it needs to develop its own AI equivalent. And obviously, that's quite difficult to do. The whole point of globalization and sharing different ideas and thoughts is that everybody can benefit from that. But if you're on the end of lots of sanctions because you've invaded Ukraine, then you're not going to do that. And I think it's a good point that Nabulina has raised, that Russia is going to struggle without access to that artificial intelligence. Now, she went on to say that inflation is slowing faster than the central bank expected. We don't have the official data yet for June, but it's been talked about being 9.4% compared with 9.9% for May. So we are seeing inflation starting to come back down, but it is still miles away from the 4% target set by the Russian central bank. So even though it's coming down, it's not happening quickly enough to be able to say that the economy is on a sure footing. And she said that if economic indicators pointed to a more significant slowdown in the economy than expected, the central bank would have room for bolder interest rate cuts. Now, if you've been following the channel, you'll know that they recently cut interest rates from 21% to 20%, so not a major movement. If you're borrowing money and it's still priced at 20%, you're not going to want to take out those loans. But I think what she's saying here is that there's a strong likelihood that we could see rates being slashed. We could see them coming down to maybe 15%, possibly as low as 10% within the next 3 to 6 months. But she went on to dismiss statements by critics of the bank who want deeper cuts than the cooling of the economy was excessive. So basically what she's saying there is that she doesn't want to bring rates right back down to 10 or 5% in one jump. She's basically wanting to take it in stages. And if you've been following the channel, you'll know that President Putin has been very keen to try to get the rates down, similar to what Donald Trump has been saying in the USA to Jerome Powell. She also rejected statements from many businessmen and bankers that the Russian ruble is now overvalued and should be weakened to please exporting companies, which have seen their revenue shrink as the ruble has increased by over 40% against the dollar in 2025. She went on to say, a weak exchange rate is often a sign of vulnerability, a result of chronically high inflation and a lack of confidence in one's own currency. It's hardly something to strive for. So she's basically putting people in their place who are saying the ruble's now too strong. And I thought it was worth talking about the ruble because I think this is a really interesting dynamic in terms of what's happening in the Russian economy and what the impact of this has been for the ruble. So if we have a look at this chart, it shows the movement in the exchange rate between the US dollar and the Russian ruble over the past 12 months. And you can see that at the start of 2025, the ruble was actually trading at one of its weakest levels in history. $1 at the start of this year was trading for 114 Russian rubles. You can see that over the past 6 months, there has been a huge strengthening in the value of the ruble. And today, $1 is trading for around 79 rubles. So that represents a massive increase. But interestingly, lots of people in Russia are not happy about this situation because, well, if we talk about the impact of a currency on imports and exports, if we start off by looking at exports, because Russia is a net exporter, that's its main form of business. It exports oil and gas and coal and lots of commodity products. It's a resource-rich country, so it sells those resources to the rest of the world. So in theory, it's negative for exporters because Russian goods will become pricier abroad, so they become more expensive. So a strong ruble raises the price of Russian goods in foreign currency, making them less competitive in global markets. Now, there is an element of truth in that in theory. However, most of Russia's products are commodity products, such as oil and gas. And those markets are basically set globally. Russia doesn't price its oil at a different level to the rest of the world just because of the strength of the ruble. The price is the price, and then whatever the companies who are selling it will get is the equivalent in rubles. And I think that is the point, and that's the second point I've raised here. It's hurting exporters in terms of their accounting because all Russian companies have to report their profits and their accounts in Russian rubles. That's the law. So basically, if you receive US dollars or Chinese yuan or euros, doesn't matter what you're receiving, you then have to convert that currency into rubles, and then you show that as your revenue figure. So when you're making that conversion, that's when those companies are losing out. So a strong ruble means that they're getting less rubles per dollar, per euro, whatever it might be. So their revenue is actually going down as the ruble goes up. So this is hurting Russian companies, and it's also hurting Russian taxes because if they're reporting lower profits in rubles, they'll pay less tax, and therefore the Russian government is suffering. So although the price of the goods isn't really being affected because they're global commodities, the amount of profit and revenue that are being reported in Russia is going down as a result of the strong ruble. And that in it will also then mean that it will reduce the trade surplus in Russia because Russia will be reporting less revenue in rubles than it was when the ruble was weaker. And so it'll have a smaller trade surplus, which means that it doesn't have as much money to fund all of the things such as the war in Ukraine. So this is now putting pressure on lots of Russian businesses. So that's why Elvira Nabulina is saying that, she's answering the comments from these businessmen in Russia who are saying, do something about the ruble, bring it back down because it's too strong, it's hurting my business. Now, in terms of the impact on imports, it makes imports cheaper because if you've got more rubles to the dollar or to the euro or to the Chinese yuan, then in theory, you can purchase more things. So it's actually good from an imports point of view, which should lead to lower inflation because imports become cheaper and so therefore pushes prices down, or the rate of growth in prices doesn't go up as quickly. That should benefit consumers and it should improve the supply chain. However, the problem that Russia has is that nobody's accepting payments in rubles. So when Russia's trading with China and India and all of its other biggest trading partners, they will not accept rubles as a form of payment. They only want to be paid either in Chinese yuan, United Arab Emirates dirhams, dollars or euros. Now, obviously, Russia doesn't want to use dollars and euros because those countries are sanctioning Russia. So essentially, Russia is predominantly trading in Chinese yuan at the moment. So the fact that the ruble is strengthening, in theory, should have been good for imports, but in reality, isn't. And that's why we haven't seen inflation coming down at the same rate as the ruble has been going up. You would have expected if there was a 40% improvement in the value of the ruble, that we'd have seen a 40% reduction in inflation. That hasn't been happening because nobody's accepting payments in rubles. Now, if we have a look at this chart, it looks at an index of the ruble against all the different major currencies. And what we've got here is an estimation as to whether or not the ruble has been undervalued or overvalued. And this is by business experts dating back to 2020. And the line across the middle here, we've got 0. So that means that it should be at that level. That's the level that everybody expects the ruble to be trading at in terms of international purchasing power and value. We've got 0 to 50 at the top of this chart, which basically shows that it's overvalued, and 0 to minus 40 on the bottom of the chart, which shows that it's undervalued. And if we just focus in on what's been happening since the war in Ukraine, so you can see that we've got a line here that says Russia invades Ukraine. And you can see at that point, when the ruble crashed in value immediately following the invasion, it was seen to be undervalued by more than 40% at that point. However, the Russian central bank then stepped in, started buying rubles and strengthening the currency, and we saw it go back to its highest level for a very long time. And it was estimated at that point that it was overvalued by around 60%. So that's a massive overvaluation. Now, over the past 3 years, we've seen the ruble deteriorating in value, and so we've seen it moving from being overvalued, that in 2023 it became undervalued again. And then in 2024, it started to increase again. And you can see that it got back to the 0 position halfway through 24. So that was basically where the Russian ruble should have been trading, which interestingly is around about 100 to the US dollar. We then saw it being undervalued again towards the end of the year. And then in 2025, as the ruble has increased in valuation, we have seen it moving from being undervalued, and now the market consensus is that it's overvalued. And it's overvalued by almost 20%. And it was recently stated that 100 rubles is seen to be by the government as the acceptable level. Now, this was a report from Reuters by a confidential Russian government source, basically saying that's roughly speaking where the government would like the ruble to be. It's currently at about 80. It would like it to be at 100. And a Russian businessman, Dmitry Belousov, recently said, currently the ruble is overvalued. Determining the extent is a complex question. There are risks that it might overshoot due to purely psychological reasons. And economist Evgeny Kogan said the ruble's real exchange rate, adjusted for inflation, was 12% stronger now than it was in 2019, and almost 15% stronger than the 10-year average. And he pointed to a clear failure in peace talks as the biggest potential trigger for a slide. Now, interestingly, off the back of all of that, the Russian government has now announced that Russia is ramping up its net foreign currency sales from July the 7th. They've said that they are going to increase the amount of foreign currency that they're selling by almost a third. The state's net forex sales will rise 31% to 9.76 billion rubles, which is around $124 million per day in the coming month, following an announcement by the Finance Ministry on its Forex transactions for the country's fiscal reserve fund. So basically what that means is that Russia is now embarking on a program to reduce the value of the ruble. It sees it being too strong and wants to move it back towards that 100 level. And this is all part of a program to try to help the Russian economy to grow. So what's the summary and conclusion today? Well, I wanted to post this video because the recent comments by Elvira Nabulina I think are really interesting. She's acknowledged that turbulent times lie ahead for the Russian economy. And this is basically the culmination of what's been happening over the past 3 years, whereby we've seen the sanctions damaging the Russian economy. Now, Russia has been supporting itself using the National Wealth Fund and setting up this wartime economy whereby lots of people are now employed directly by the state. And so it's looked like things have been going quite well for the last 18 months or so. However, over recent months, we've seen inflation starting to rise. It got above 10%, which set alarm bells ringing in the Kremlin. And we saw interest rates going to 21%. And if you have a look at what's going on in the rest of the world, 21% interest rates tells you in itself that there are major issues in Russia. You shouldn't be getting anywhere near 20% interest rates. Your interest rates should not be double what your inflation is. Maybe your inflation is double what your interest rates are, but certainly it shouldn't be the other way round. And this all tells us that things are getting out of control in Russia. And what we've seen over the last 6 months is the National Wealth Fund has reduced massively. It's come down from around $150 billion equivalent at the start of the war to less than 30 now. And there isn't enough left to keep funding the economy in the same way as happened over the past couple of years. So I recently reported that President Putin has announced that Russia is now going to cut back on its military spending, predominantly because it can't keep affording to go at the current rate. And also, we know that the economy is slowing down, that inflation has started coming down, mostly because the economy isn't growing. We're seeing the Russian economy stalling. It could even go into recession. And one of the problems that's emerged over the past 6 months or so is the increase in the value of the ruble, which is now hurting lots of Russian companies, not because the ruble is operating in the same way as every other currency, and therefore when it strengthens, it's good for imports and it's bad for exporters, but because the exporters are having to convert all of their income into rubles before they report it in Russia. And so on paper, their profits are plunging now because the value of the ruble has gone up so rapidly. So businessmen in Russia are saying, please help, do something about this because my company is starting to tank. I'm reporting much lower revenues and profits, and I don't want that to happen. But Elvira Nabulina is saying, well, we don't want to weaken the ruble because for the last 3 years we've been supporting it. We were told to keep the value up as much as possible because the value of the ruble is seen to be a reflection of the value of the economy. But everybody's now wanting to abandon that because it's not in their personal interests to keep the value of the ruble up. So the overall summary of today's video is that the head of the Russian central bank, Elvira Nabulina, who I think is a voice of reason coming out of Russia, has said that the Russian economy is facing very turbulent times. She's acknowledged the fact that Russia is now well behind the curve in terms of artificial intelligence. So Russian companies are losing pace against the rest of the world. That's going to set the Russian economy back further at a time when there's an employment crisis, there's a wage spiral, and inflation is still over 2 times the target rate. So there are lots of problems now emerging in Russia, and it's likely that these problems are going to persist for the rest of 2025. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking, you've liked me in my kitchen, maybe, I don't know. Thank you for watching this video all the way through to the end, and thank you so much for supporting me and the channel. If you would like to support me, I think the best way of doing that, if you're interested, is to join up as a member, either YouTube membership, that's probably the easiest if you're watching me on YouTube, or Patreon, where you have to go over to a different website. If you go to Patreon, you can watch the videos advert free. You can get them promotion free on YouTube, and you'll also get early access. So if that's something that you fancy doing, that would be great because I'm trying to build the membership up. If it gets to a certain level, I may even start producing content that is only for members if that's what people would like to see. Although I did post a video recently that I released first to members, and somebody sent me a message saying, please make this available to everybody. Don't just show it to members. So you can't please all of the people all of the time. But thank you for watching this video all the way through to the end. And here's something to put a smile on your face.
Are you done? Swim more. Swim more. I'm going to swim. I'm going to swim. I'm going to swim.